Buckle up, investors and market enthusiasts. This upcoming week promises a whirlwind of high-stakes drama that could reshape your portfolio's fate, with tech titans and global economic policymakers taking center stage. But here's where it gets intriguing. While earnings numbers might steal the spotlight, the subtle shifts from central banks could be the real game-changers lurking beneath the surface. Let's dive into Michael Kramer's curated selection of pivotal market happenings kicking off Monday, October 27th, designed to keep you informed and ahead of the curve. The crescendo of earnings season is here, and it's a doozy. We're talking blockbuster results from tech powerhouses like Apple, Amazon, Alphabet, Microsoft, and Meta. These five behemoths collectively represent roughly 45% of the NASDAQ 100's market capitalization and a hefty 25% of the S&P 500's total weight. For newcomers to the stock market, think of market capitalization as the total value of a company's outstanding shares. It's a key measure of a company's size and influence. In simpler terms, these giants are like the lead actors in a blockbuster movie. Their performance could dictate whether the broader U.S. stock indices, such as the NASDAQ and S&P 500, soar to new heights or stumble this year. With so much riding on their quarterly updates, savvy traders are already buzzing about potential volatility. Yet, amid the earnings frenzy, don't overlook the trio of crucial central bank gatherings this week, featuring the U.S. Federal Reserve, the Bank of Japan, and the European Central Bank. These meetings aren't just routine. They're pivotal moments where monetary policies get tweaked, influencing everything from your savings account interest to global currency values. Let's break down the Fed, BoJ, and ECB sessions in detail. Kicking things off on Wednesday, October 29th, the U.S. Federal Reserve is widely anticipated to trim interest rates by a quarter percentage point. That's 25 basis points in financial lingo, where a basis point is just 0.01% of a percentage point. For beginners, this means borrowing costs might dip slightly, potentially boosting spending and investment. Meanwhile, the Bank of Japan and European Central Bank are expected to hold steady, but eyes will be glued to any whispers from the BoJ about a possible rate increase in December. While the chances of that happening are slim, recent developments, like the election of a new prime minister and calmer trade relations, could open the door to such a shift. And this is the part most people miss. Even a hint of change from a typically cautious BoJ could send ripples through Asian markets, challenging the status quo. On the ECB front, no major moves are forecasted, but the big question is whether they've truly wrapped up their cycle of rate reductions. The euro is looking fragile against the US dollar compared to the yen, with the euro to US dollar currency pair hovering near a critical support level at $1.161. To explain this simply, support levels are like a safety net in price charts, where the asset tends to bounce back if it drops to that point. If the ECB convincingly signals the end of their cuts, the euro might rally and climb higher. But if their communication falls flat, we could see the euro plummet through that support, potentially targeting $1.14. Traders, take note. This scenario could fuel debates on the ECB's resolve. Is their pause a sign of strength, or just a delay before more turmoil? Share your thoughts in the comments. Now, shifting gears to corporate earnings, let's spotlight Meta Platforms' Q3 results, also slated for Wednesday, October 29th. The social media giant, listed on the NASDAQ, is projected to see earnings jump 10.8% to $6.68 per share, with revenue climbing 21.6% to a whopping $49.4 billion. Capital expenditure, often shortened to CAPEX, which refers to money spent on big-ticket items like equipment and facilities, is expected to more than double to $19.8 billion from $8.3 billion last year. Looking ahead to Q4, analysts foresee earnings barely ticking up, less than 1%, to $8.75 $1.09 per share, with revenue rising 18.1% to $57.1 billion and capex surging 68.6% to $24.3 billion. For those new to this, capex is crucial because it shows how much a company is investing in future growth, like data centers for Meta's vast online empire. The stock might swing about 7% post-announcement, and options traders, those betting on future price moves, are showing strong bullish sentiment. But here's where it gets controversial. Historically, when bullish positioning gets too extreme, shares often dip after earnings as volatility cools and hedging activities reverse. Could this be a setup for a surprise downturn, or are we underestimating Meta's AI and advertising prowess? Adding to the intrigue, Meta's share price chart might be forming a double-top pattern, a technical analysis term where the price hits a high twice without breaking through, signaling potential reversal. The neckline, or the level connecting the lows between those peaks, sits between $715 and $736. Currently trading near $736, Meta would need stellar results and optimistic forecasts to push above $750. Plus, its Relative Strength Index, RSI, a momentum indicator that measures overbought or oversold conditions on a scale of 0 to 100, is declining, hinting at bearish divergence. A drop below $712 could confirm the pattern, possibly dragging prices down to $675 to $650. Beginners, remember, RSI helps spot when an asset might be due for a pullback, much like a car's speedometer warning of overheating. And this is the part most people miss. While Meta's metaverse investments have sparked endless debate, are they a visionary leap or a costly gamble? Do you agree that double-top formations are reliable predictors, or has over-reliance on technical analysis led to missed opportunities? We'd love to hear your take in the comments. Next up, Microsoft's Q1 results on the same day. The software maestro, also Nasdaq-listed, is forecasted to see earnings grow 10.5% to $3.67 per share, with revenue up 14.7% to $75.3 billion. Capex is slated to rise 48.7% to $22.2 billion, driven by hefty investments in cloud services and artificial intelligence. For the fiscal second quarter, guidance points to 14.8% revenue growth to $79.9 billion, with capex increasing 38.4% to $21.86 billion. Again, for clarity, capex here reflects Microsoft's push into Azure cloud and AI tech. Think of it as building the digital highways for tomorrow's innovations. Shares could shift around 4.3% after the report, with option sentiment mixed. Support hovers near $510, resistance around $550. Technically, the stock has been in a sideways drift since July's earnings, lacking clear direction. Based on expected volatility, it might stay within this range post-results. A quick note for transparency: Michael Kramer and Mott Capital clients hold positions in Microsoft. But here's where it gets controversial. Some argue Microsoft's AI frenzy is overvalued, while others see it as the next tech revolution. Is this sideways trading a calm before a storm, or a sign of stagnation in the software world? Share your predictions below. Finally, here's a snapshot of the broader economic and corporate events calendar for the week, packed with data releases and earnings that could influence markets. Monday, October 27th. U.S. durable goods orders from September, plus auctions for 2-year and 5-year Treasury notes. Company results. Cadence Design Systems, Q3. Tuesday, October 28th. UK. BRC Shop Price Index for October. U.S. Consumer Confidence for October. Richmond Fed Manufacturing Index for October. S&P/Case-Shiller Home Price Indices for August. Company results. HSBC Holdings, Q3, United Health Group,